Hey there, future millionaires. Are you eager to make your first $1 million but don't know quite how to start? Can anyone truly become a millionaire through intelligent investing? Today we are embarking on a road less traveled, the Intelligent Investor's Road to $1 million. So fasten your seatbelts because this is going to be an enlightening journey. If you are new here, don't forget to hit that subscribe button and join us on a journey to financial freedom. Let's get started. Segment 1. Understanding the Foundations. Understanding the foundations to becoming an intelligent investor is pivotal in ensuring your journey in the investment world is successful and sustainable. Let's break it down. Step 1. Educational Foundation. Understanding basic financial concepts like inflation, interest rates, and financial statements is crucial. Grasp the understanding of how markets work, including the factors that influence stock prices, market trends, and cycles. Familiarize yourself with various investment vehicles, such as stocks, bonds, mutual funds, and real estate. Step 2. Psychological Foundation. Understand your own risk tolerance level. It will help you choose the right investment strategies you can adhere to over the long term. Learning to keep emotions in check and not letting fear or greed drive investment decisions is crucial. Understanding that investment is a long-term game and cultivating the patience to stick with your investment plan, even when pressured by market volatility. Step 3. Strategic Foundation. Learn about the importance of a well-diversified portfolio that aligns with your investment goals and risk tolerance. Develop the ability to conduct thorough research and analyze investment opportunities, evaluating them based on their merits and potential returns. The investment landscape is constantly evolving. Commit to continuous learning to stay abreast of new developments and opportunities. Step 4. Ethical Foundation. Understanding the importance of investing in companies that provide good returns and adhere to ethical business practices. Consider the impact of your investments on society and the environment and how you can contribute positively through your investment choices. Maintaining integrity by avoiding investments in companies or funds that engage in fraudulent or dubious practices. Step 5. Practical Foundation. Start with small investments to gain real-world experience without exposing yourself to significant risks. Connect with other experienced investors. Join investment clubs and forums to learn others' experiences and insights. Don't hesitate to seek professional advice, especially when you are just starting out. It can help you avoid common pitfalls and guide you in the right direction. By solidifying these foundations, an aspiring investor prepares themselves to navigate the complex world of investments with a well-rounded perspective and a sturdy game plan, setting the stage for potential fruitful outcomes in the long run. Segment 2. Crafting the Roadmap. Now, let's discuss how you can craft a roadmap that aligns with the foundations of becoming an intelligent investor. Step 1. Setting clear goals. Identify your financial goals. It could be buying a home, securing your child's education, or planning for retirement. Pinpoint the exact amount you aim to achieve and by when. Establish a clear time horizon for your investments. It helps in selecting the right investment vehicles and strategies. Step 2. Building a robust portfolio. Develop a diversified portfolio that includes a mix of asset classes like stocks, bonds, real estate, and possibly alternative investments. Depending on your risk tolerance and financial goals, allocate assets strategically to strike a balance between risk and reward. Step 3. Strategy Implementation. Select an investment strategy that aligns with your goals and risk tolerance. It could be value investing, growth investing, or a blend of both. Implement the tools and techniques for in-depth research and analysis to identify potential investment opportunities. Step 4. Monitoring and adjusting. Regularly review your investment portfolio to ensure it's on track to achieve your goals. Adjust as necessary to account for market changes or circumstances. Have contingency plans in place to manage unforeseen events, such as market downturns or personal emergencies, without jeopardizing your financial goals. Step 5. Long-term commitment. Understanding that building wealth through investing is a gradual process. Maintain a long-term perspective and resist the temptation to react to short-term market fluctuations. Commit to continuous learning to enhance your investment knowledge and adapt to changing market dynamics. As you progress on your journey, remember that the road to becoming an intelligent investor is paved with dedication, education, and a well-crafted roadmap. Stick to your plan, stay informed, and adjust as necessary to navigate the road to financial success. Segment 3. accelerating towards $1 million. Here, we address the pivotal phase where we ramp up our efforts, honing in on strategies that can significantly boost our investment portfolio towards the coveted $1 million mark. Let's delve in. Step 1. Enhancing investment strategies. As you grow, utilize advanced investment tools and analytics to gain deeper insights into market trends and investment opportunities. Identify and leverage opportunities in sectors and industries showing strong growth potential. Invest in stocks or assets that have the potential for high returns while aligning with your risk tolerance. Step 2. Maximizing compound interest. Implement a strategy to reinvest the dividends and capital gains to maximize the benefits of compound interest, essentially making your money work for you over time. Ensure consistent contributions to your investment fund, even during downturns, to capitalize on the potential growth during market recovery. Step 3. Enhancing financial knowledge. Continue to enhance your financial education, understanding complex investment instruments and market dynamics. Seek mentorship from seasoned investors and network with professionals in the field to gain insights and knowledge that can aid in making informed decisions. Step 4. Portfolio management and risk mitigation. Adopt a dynamic asset allocation approach where you adjust the composition of your portfolio based on challenging market conditions and investment goals. Implement risk management strategies to protect your portfolio from significant losses, including setting stop-loss limits and hedging through diversification. Step 5. Eyeing the milestone. Keep a close eye on your financial milestones, tracking your progress toward the $1 million goal, and making necessary adjustments to stay on track. As you approach your goal, start thinking about how you can utilize your wealth to build a legacy through philanthropy, starting a business, or setting up a financial safety net for your family. Reaching the $1 million milestone is a journey of perseverance, knowledge, and strategic planning. By focusing on accelerating growth while mitigating risk, you pave the way to reach your financial goal and potentially surpass it, carving a path of financial freedom and security. Segment 4. Reaching the destination. Reaching the milestone of $1 million is not just a victory in financial terms, but a testament to one's perseverance, acumen, and strategic foresight. Let's discuss how one can approach this crucial phase. Step 1. Reflection and acknowledgement. As you near the destination, take a moment to reflect on your journey, acknowledging the knowledge acquired, the skills honed, and the resilience built over time. Don't wait until the final goal is reached to celebrate. Acknowledge and celebrate the smaller milestones that have marked your path to financial growth. Step 2. Assessing and consolidating gains. Conduct a thorough assessment of your portfolio, understanding the gains made and the assets that contributed most to your growth. Consider consolidating gains, possibly reallocating assets to secure and preserve accumulated wealth. Step 3. Planning for the future. Focus shifts slightly towards wealth preservation strategies, incorporating more stable and low-risk investments in your portfolio to safeguard your accumulated wealth. Start considering estate planning to ensure the seamless transition of wealth, protecting your assets and future generations. Step 4. Expanding horizons. As a seasoned investor, begin exploring new investment avenues, possibly venturing into entrepreneurial endeavors or real estate investments. Consider using a portion of your wealth for philanthropic activities, contributing towards societal and environmental betterment. Step 5. Lifelong learning and adaptation. Even at this stage, emphasize the importance of continuous learning, adapting to new market trends and investment opportunities. Transition from being a learner to a mentor, sharing your wealth of knowledge and experience with budding investors, fostering a community of intelligent investors. Reaching the $1 million mark is indeed a significant achievement, a testament to your dedication, intelligent strategies, and sustained efforts. It is not the end, but a new beginning, opening doors to new opportunities and horizons. As we wrap up, remember the journey of an intelligent investor is lifelong, marked by growth, learning, and fulfillment. So are you ready to take the wheel and start your journey on the intelligent investor's road to $1 million? If yes, make sure to hit the like button, share this video with your fellow investors, and subscribe for more insightful content.